Hello guys, and welcome back to our channel. In today's video, we're diving deep into ONVO's latest delivery numbers and what they mean for the company's future. If you've been following the EV market, you know there's been a lot of discussion about ONVO's performance, and we're here to break it all down for you. Let's get started. Many of you have expressed disappointment over ONVO's recent delivery numbers. The company had projected 16K vehicle deliveries for January, but the actual figures were significantly lower, roughly one-third of that estimate. While I'm not here to change your perception, I want to highlight some intriguing statistics and charts that provide perspective on the situation. Let's start with a broader view of the luxury EV market in 2020. A detailed table reveals that among EVs priced between 300K and 400K RMB, NIO dominated the segment. The top 4 best-selling models in this category all belong to NIO, with the ES6 securing the number 1 spot, delivering 76K units. In comparison, the XPeng X9, positioned at number 5, trailed significantly. Even though Tesla's Model Y is slightly more affordable, NIO still managed to capture a stronghold in the premium EV space. Shifting our focus to January's figures, a new dataset shows that NIO maintained its relevance, ranking 3rd in the market for the first 3 weeks of the month. While other competitors like XPeng and Xiaomi offer slightly cheaper alternatives, when factoring in NIO's price range and its position as a pure EV manufacturer, its performance remains commendable. In contrast, Li Auto includes gasoline-powered vehicles, which skews the competitive landscape. If NIO had ventured into hybrids, it would likely dominate those rankings as well. However, NIO's mission is distinct. It prioritizes a cleaner environment with its blue sky coming vision, avoiding the use of gasoline-powered engines altogether. Now, let's address the elephant in the room: ONVO's backlog. A considerable number of customers are still awaiting their vehicles, with Chinese New Year festivities contributing to production slowdowns. Sales representatives indicate that manufacturing is ongoing, but capacity constraints persist. December's relatively high delivery figures stemmed from ONVO selling showroom and test drive vehicles to allow customers to benefit from government incentives before the year's end. However, the company's actual production capacity remains modest, averaging around 7K to 8K units per month. Factoring in the seasonal break, the reported 5K deliveries in January align with expectations. Looking ahead, ONVO must scale its production efforts significantly to achieve consistent monthly deliveries exceeding 10K units, eventually surpassing 20K by March. While concerns have been raised about the CEO's recent silence, this is likely due to behind-the-scenes efforts to enhance production rather than an admission of failure. Despite the challenges, ONVO continues to manufacture vehicles even through the holiday period, albeit at a reduced pace. The initial 16K delivery goal was ambitious, especially given the constraints posed by the Lunar New Year. Even in December, ONVO struggled to reach 10K deliveries despite leveraging showroom vehicles. Unlike traditional automakers, ONVO operates on a direct-to-consumer production model, meaning vehicles are built to order rather than stockpiled in inventory. Consequently, slight fluctuations in output and deliveries should be expected. Turning to the broader EV industry, pure electric vehicles continue to face stiff competition from hybrids and gasoline-powered models. The perception that EVs should be cheaper remains a barrier in the luxury segment, much like the comparison between e-bikes and motorcycles. Consumers still expect premium cars to rely on combustion engines, making it challenging for high-end EV manufacturers to shift mainstream preferences. A case study from Zhejiang province highlights NIO's disruption of the traditional luxury SUV market. In 2024, the second-generation EC6 outsold coupe-style gasoline SUVs from established brands like Mercedes, BMW, and Audi, outperforming their combined sales by 20%. This signals a shift in consumer behavior, though hesitation around fully committing to EVs remains prevalent. Many buyers, particularly those opting for Li Auto vehicles, cite extended range, large infotainment screens, and comfortable seating as primary reasons for their choice. NIO, apart from the ET7 Executive Edition, does not currently offer expansive rear screens like Li Auto. Despite efforts to promote features like battery swapping, convenience often trumps innovation in consumer decisions. Over time, however, hybrid owners may grow frustrated with slower charging speeds, frequent fuel stops, and higher gasoline costs, ultimately transitioning toward brands like NIO or ONVO, which provide seamless battery swapping solutions. Looking forward, ONVO is expected to improve its delivery figures in February, with hopes of surpassing 10K units. By March, the goal remains to exceed 20K deliveries, solidifying its place in the market. While setbacks exist, ONVO's trajectory suggests that it is working diligently toward overcoming these challenges, and future months could bring promising results. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.